Hello there, Profit Pilot here. Today we're going to take a look at the 4 IPOs I'm most excited for in 2021. Last year we saw many big IPOs generate a lot of hype, with some offering great returns to anyone who invests in them early on, while others were not so well perceived and their stock is at a lower price point than the IPO. As you can see, IPOs are high risk, high reward plays, as it is often hard to determine a fair valuation for them. So starting off with the first IPO I'm excited for, and that is Roblox. Roblox is a free-to-play video game platform that first released in 2006 and is expected to IPO in March 2021. When I show you gameplay of Roblox, you might be surprised to hear that it has an estimated valuation of $30 billion, and less surprised to hear that the target audience is slightly younger than for most video games. Now the reason I'm excited for this IPO is quite straightforward. Firstly, Roblox is an online game platform and game creation center that allows users to program games and play games created by other users, meaning it can adapt to trends quickly and offer new content that keeps people engaged. Users or developers who create games don't directly get paid by Roblox. They instead earn a kickback whenever players make virtual purchases within their games. Unlike traditional game studios that have to invest money and hope their game is a success, Roblox saves money that way as they source the part of game production out to some users. The second reason I'm interested in investing in this company is the growth opportunities it offers. The video game industry is set to grow even more in the coming years, and with Roblox offering their games on multiple platforms from PC to iOS, Android, Xbox, and even VR platforms, they can target a very large audience. But moving on to what could go wrong, or similarly, what are the risks of investing in this company? The first question you've got to ask yourself is, how long can it stay relevant for? With the majority of its users being under the age of 13, brand loyalty is not as strong, and there's a multitude of other entertainment options trying to gain their attention. While I did say it can adapt to trends quickly and offer new content, it is hard to predict exactly what these new trends will be. The second thing you should be wary about is that while Roblox has been growing steadily since 2010, and the company did experience a spike in engagement from people spending more time indoors during the pandemic, with it reaching an incredible 150 million monthly users in 2020, it has not yet turned a profit since its founding in 2004, with engagement likely to decrease post-lockdown. Turning a profit won't become easier, something that might be a red flag for some investors. Another risk I see investing in Roblox is how dependent it can be on external distribution channels. Should, let's say, Apple or Google change its fee structures for the App Store or Google Play Store, it will heavily affect the revenue Roblox receives, with roughly 60% of engagement coming from these distribution channels. Moving on to the second IPO I'll be keeping my eye on, and that is Coinbase, one of the leading cryptocurrency exchanges, founded in 2012 and valued between 50 to 75 billion US dollars and set to IPO in March. I often like to see it as the Robinhood of cryptocurrency exchanges, with its extremely simple user interface and north of 43 million users in over 100 countries. Your interest in this IPO, however, will heavily depend on how optimistic or pessimistic you are on the future of cryptocurrencies. Should interest in cryptocurrencies increase, it would most likely have a positive effect on Coinbase, with more people engaging with their service and them profiting from the fees and/or premium membership they offer. Another aspect I like about the Coinbase stock is that it might behave similar to what a cryptocurrency ETF would, meaning if the crypto market is on a general upwards trend, you can profit from it and don't need to own the exact coins that are pumping, as some cryptocurrencies can experience immense appreciation, while others don't even move in the same time frame. There are of course risks involved in investing in this IPO, the obvious one being how dependent the stock price will most likely be on the crypto market, and in a similar vein, Bitcoin's price, like you see with other stocks that are related to crypto. Another risk is the variety of competitors in the sphere with unique selling points such as Binance, Cash App, and potentially even other financial institutions deciding to offer cryptocurrencies as assets such as etoro. The third IPO that I'm excited for in 2021 is Squarespace, and surprisingly it hasn't gotten as much media coverage as the prior two. So Squarespace is a website building and hosting company famous for its intuitive pre-built website templates and drag and drop elements, which was founded in 2004. Squarespace was last valued in 2017 at $1.7 billion. To keep things short, the factors that make this an attractive investment is that the company is already profitable and that it offers a service that is in high demand in a sector that is not slowing down anytime in the near future. The risks are, however, how much of the market share it can gain or even just maintain. The following report shows the market share trends for content management systems, and while it is currently above its competitors such as Wix, GoDaddy, and BigCommerce, it is far away from being the leader in the industry. The fourth and final IPO in today's video is Instacart. For those of you who don't know, Instacart is a grocery pickup and delivery service founded in 2012. It is set to go public in the first half of 2021 at a valuation of $30 billion. I'm personally interested in this stock as it has a clear business use case, with there being people who want to use or might even be reliant on their service. With recent data saying 31% of US households, or roughly 40 million people, have used online grocery services like home delivery and pickup over the last month. Coupled with the fact that in 2020 alone, Instacart consumed 57% of the grocery e-commerce market and has increased their order volume by 500%. With Instacart currently only being available in the US and Canada, it also still has a lot of room to grow. Looking at the risks of investing in this company, it should be no secret that a lot of the statistics I just mentioned will have been warped by a year that saw various lockdowns, and that the trend of ordering groceries online might decline. Additionally, like other gig companies such as Uber and Lyft, various labor risks and complications whether Instacart shoppers should be treated as employees or contractors and what benefits they receive could alter the stock price dramatically. So, these are the top 4 IPOs I'll be keeping an eye out for in 2021. Leave a comment down below if you're interested in any of these IPOs as well, and if there's any interesting IPOs I missed, please comment them down below. As always, I am not a financial advisor. Please do your own research before investing into any of these companies mentioned in this video. And if you made it this far, you might as well subscribe and like the video. And for those of you looking to start your investing journey with a free stock with up to £100, sign up to Trading 212 using my referral link in the video description down below. And with that being said, goodbye, good luck, until next time.